Two, one. We are live. Hello and welcome to yet another episode of PropTechBuzz, where we talk to PropTech industry leaders, CEOs, and founders from all over the world and learn from them insights on what it takes to build successful PropTech companies. Today, I'm thrilled to have with me Wilhelm Stahlke. He's the VP Investments from CASAFARI. And with Wilhelm, we will discuss about opportunities for investors in rental space and how PropTech players are solving it around the world. Wilhelm is currently building out the portfolio solutions product team at the PropTech CASAFARI. They are revolutionizing PRS, which we are going to ask what PRS stands for. And they are assisting institutional investors in constructing large real estate portfolios of individual assets at scale. They are powered with Europe's most deep and broad database of asset information and supported by world renowned VCs. Wilhelm is a graduate with the dual degree MBA and Big Data Analytics Master's program from IE Business School, and he has a Bachelor in Finance from NYU Stern School of Business. He's a former top ranked investment advisor in New York City, and we are thrilled to have him. As I said, welcome, Wilhelm. Welcome to PropTech Buzz. How are you doing today?
I'm wonderful. Thank you so much for having me. That was a very illustrative and complete, quite flattering background on me. So I much appreciate the intro, and I'm very excited to speak to you all today and give you a bit more background on, or demystify rather, everything related to PRS.
Excellent. There was no exaggeration there. It's just pure facts of your accomplishments. So let's dig in then. So for the audience, I was just telling Wilhelm, since this is a topic I've never covered here, and this topic would be new to many of you, we would take this as a, say, real estate for investors 101 sort of a conversation. So we are going to I will be going to ask a lot of dumb questions, foundational questions, and then we build on top of that. So Wilhelm has agreed to dumb himself down for the layman audience here. So Wilhelm, why don't we get started with your profile? What do you do at CASAFARI? That would be
Yeah,
good.
sure, definitely. So CASAFARI was a company that was really born as a data company. We wanted to bring transparency to the real estate market. Our founder, Nils, Mila, and Mitya actually founded the company in Spain because they were trying to invest money on their own into the real estate sector after having some few successful exits from other startups. And they realized that it was very difficult to obtain information about the real estate market. You can go on different portals, marketplaces rather, and find assets that are for sale, but it was difficult to sort of perhaps benchmark what those assets should be priced at, to do comparables analysis, to look at the trajectory of how prices have changed in that particular city, but more than just a city, even at a granular level. So CASAFARI was born to bring transparency to the real estate market. Today, we've grown a lot over the past few years, and we essentially have two verticals of solutions that we offer to our customers. We have our SaaS solution, so SaaS is software as a service, which is a B2B solution that we offer to any sort of company that's in the real estate sector that needs or has a particular information need on real estate. And then we have portfolio solutions, which is the vertical that's specifically devoted towards assisting institutional investors and helping them build out granular real estate assets across Europe, specifically focusing on our home region of Southern Europe. So two different verticals serving two different types of clients, but all based off of the spectacular level and depth of data that we have.
Got it. So portfolio solutions is primarily targeted to investors, or are there uh, property developers as well?
Yes, so I would say in portfolio solutions, our sort of core client is an institutional investor, a pension fund, a sovereign wealth fund. We've even built out our own small fund in Portugal, or family offices. So sort of specifically devoted towards assisting them across the life cycle, 360-degree view of designing a portfolio, building that portfolio, managing it, and then subsequently disposing of it, selling of it. So whilst maybe a developer would need information about prices in the real estate market, and that might be a better fit for our SaaS solution to have them get a better understanding of how prices have evolved, of what the potential demand and supply equilibrium is in a city.
Got it. Excellent. And SaaS, what other target audience, target markets does SaaS offer? Is it developers? Is it real estate agents? Who would be the target audience for SaaS solutions?
Yeah, definitely. So there are a lot of different profile fits for our SaaS, but we work with a lot of real estate agencies across the different countries we operate in. So real estate agencies, valuation firms, developers, anyone that any sort I shouldn't say anyone, any sort of business that needs the data transparency and the data completeness on the
Got,
market.
got it. Excellent. And then you also mentioned to me that there are different verticals of portfolio solutions: acquisitions, property management, and asset management. Maybe you could shed some light there as well.
Yeah, definitely. So, when an institution or a professionalized investor comes to us at Portfolio Solutions, there's essentially we sort of there's the entire investment underwriting, the development of the investment strategy of the thesis. And that's sort of where I sit in, specifically focusing on the Spanish and the Portuguese market myself. But what we do is we listen and we hear what the investment metrics are of that particular investor, and then we build a bespoke investment strategy around that. They say, I would like this kind of risk profile, this kind of asset. I prefer exposure to these kind of geographies. This is the kind of yield that I need. This is my IRR target over X period of time. So when we have all that information of what the investor needs in order to comply with their own internal metrics, we are then able to build out and design the strategy for them. Once we have the go, once we capture the mandate, then that's sort of where the three sort of phases of capital deployment of the investment begins. So first we have our acquisitions team. We have a team which we call our real estate transaction specialists, who are people that have a deep amount of local market knowledge in their specific cities where they operate. They are the people that go out and look for the properties, always using the CASAFARI solution of searching for the properties, running comparables analysis, everything across the acquisition timeline from identification to closing of the asset, negotiation, all that in between. So it's acquisition. Then once the acquisitions are done, based on sort of the amount of capital that's deployed, then it's all about property management. It's very important to realize that our interests in CASAFARI Portfolio Solutions are perfectly aligned from the beginning of acquisition to disposal, right? So if you're taking a step back, looking at the investment underwriting stage, we project discounts that we can acquire for each asset. We also project rent levels. So that's sort of all done. Also, particularly, it's making the business plan come alive in the acquisition stage. Then post closing, it's property management, renting out the asset, making sure that that the prices are optimized for what the market can hold, and to quickly have the asset leased by a strong tenant. Everything related to property management, even the calls in the middle of the night when there might be an issue of the refrigerator stopping to work. So everything like that is PM, property management. And then finally, sort of at the end, the third phase, third silo is asset management. So everything related to asset management, particularly related to the disposal of that portfolio over time, of making sure that it's properly marketed and sold to the next buyer. So we sort of cover the entire life cycle of what it is an investment into the PRS, private rental sector.
So what catches my curiosity is you talked about bespoke solutions for individual clients.
Mhm.
Um, I would imagine as a software SaaS product company, you would build up a product that is scalable across any kinds of investors. Is this a deviation there? Is this a bespoke say project based solutions than a product, so to say, which can be applicable to all kinds of investors?
Yeah, sure. That's a good question. I mean, I think it's always sort of a function of we don't presently nor have on the pipeline to work with retail investors. We work with larger investors, and I think the called bespoke planning, or the building of a business plan and the entire capital deployment. The singularity of it, meaning of okay, I will design it for you as a function of how much one is looking to invest, or a particular institution out there is looking to invest. But we also do have we have built out a fund where we'll say this is the strategy, this is the asset, this is the asset profile, these are the return metrics, and we do have family offices that have invested into that kind of fund as well.
Now I understand the difference between a SaaS and a solutions. So excellent, cool, thank you. Now let's get into the industry. Let's understand this industry a little better. I have seen these terms PRS, BTR, SFR being used interchangeably, and it is a recipe for confusion. Maybe you could demystify as we started with, right? So what is the difference? Are there differences between those three?
Sure, perfect. Maybe I'll also explain what each of those letters mean. So PRS is the private rented sector, BTR is build to rent, and SFR is single family residential. Okay. I would almost sort of bucket PRS and SFR in together, because PRS is generally more referred to PRS in the UK, whilst in the US they refer to it more as SFR. But it's generally more granular individual assets that make up an entire rental portfolio. Many of them, oftentimes hundreds, could be put together and made into a single portfolio. Whilst BTR, build to rent, is purely focused on, it's something that's it's been going on in the US for quite some time. It's the development, construction, and letting out of a building that is purpose built for rental. It's almost like multifamily housing. Okay. They're two different things, because PRS, SFR, it's generally related to secondhand stock. Not always in the US. Oftentimes there could be a little bit of an overlap between BTR and SFR, as I don't want to get too detailed into how it works in the US, but it's in Europe, it's primarily secondhand housing stock, whilst BTR is completely new build. Okay. In the US, multifamily housing has been big for decades. Just sort of if you sort of look at how cities are built in the US and the amount of land, it was relatively much easier for a developer or an investor to build a building from scratch in relatively a city center and have it be, completely purpose built and designed for a rental solution. Whilst in Europe, at least in Southern Europe and Spain, that's something that's really been sort of, it's a bit newer, and it's been growing in sort of in interest over the past few years. And then whilst SFR and PRS was generally made up was by smaller individual landlords that would own 3, 4, or 5 scattered units. And what we're doing in Portfolio Solutions is we are allowing an institutional level exposure to the SFR PRS sector of aiding institutional investors in building up portfolios of individual units at scale, which previously wasn't possible, because it's sort of the kind of work to acquire, identify granular assets it's a different ball game, I guess, compared to BTR, which is a little bit more professionalized experience behind it.
Got it. Help me understand. First of all, help me. Let's agree whether this is right or wrong. Is SFR a more likely choice for institutional investors over multifamily home? Is there a preference of one over the other?
Yes. I mean, I would say there's a bias, maybe not preference, there's a bias towards multifamily housing for many reasons. One, it's something that, it's easier to manage, and the management process is very important. If you have a portfolio of 300 units, and it can be in one building, or it can be, 300 units that are scattered, from an economies of scale perspective, from a management perspective, it's easier in a single building, in multifamily housing, much harder on the single unit side. But I think one thing that's unique about Europe, and particularly our city centers, as we do not have this plethora of space that you might have in cities in the US, if you want exposure to call it more centrally located assets, PRS, SFR is really the only way to go. If I'm thinking about Madrid, I cannot build a portfolio, or build a building rather, in the heart of Madrid, in the middle of the center, of a ground up construction. I mean, you can. I shouldn't say you cannot, but it's generally just too costly. It's too difficult. Thus, that's why if you look at in Spain, a lot of the BTR projects are sort of in the peripheries of the cities, not in the core center.
So
Whilst yes,
isn't this counterintuitive? You said Europe has lack of space vis-a-vis US,
yes,
and
in
there's
the
lack
city
of space.
centers, yeah.
You'd want to build more units per building, no? I'm
You
just
would
trying
want
to.
more units towards you would want more units. You would want unit concentration versus not from the management perspective. But
Right.
what I'm saying is because you cannot build, or it's difficult rather to build a purpose-built rental building in the city center in Europe, your only alternative if you want prime or centrally located exposure is through construct. I guess I shouldn't say construction, rather acquisitions of single units and joining them together into a portfolio rather than being able to acquire a single building full of,
Got
of,
it.
of, of rental stock.
Got it. Got it. So the portfolio could be scattered portfolio, and that is okay.
Yeah, that's a scattered portfolio really is what is the heart of SFR. It's a scattered portfolio, and we're here to show investors that it can be done efficiently in terms of the build up, in terms of the management, and you'll get exposure just to a different location than you would in BTR.
Got it. Excellent. So for Casafari's operations in around Europe, it would be SFR primarily, I suppose, for
Yeah,
institutional.
exactly. SFR is really our value add, unlocking the ability to identify and build up a portfolio of single units.
Excellent. Cool. Thank you. Let's also try to understand, since you have had exposures in the US as well. Could you explain the growth in the US and its expected impact in the European residential markets?
Yeah, sure. I mean, if you look at housing, I guess rental housing stock, particularly in the U.S., it was traditionally multifamily housing. Like I said previously, the ability, the amount of land was favorable. It was larger, and so it was favorable towards investors wanting to build up, purpose-made BTR buildings, right? But then what we've sort of seen over the past 10 years has been growth in the SFR space. And it's something I think Europe in a certain way, particularly, I guess maybe it's market dependencies, but Spain, we certainly lag a bit how it's done in the US. So BTR in Spain has been something that's relatively new, and SFR is even relatively newer. I think the expected impact is ultimately, whilst the dynamic in the US is it's percentage of rental housing stock that's in multifamily versus single family is largely skewed towards multifamily housing. I think over time in Europe, it will become a bit, the discrepancy won't be as large as we sort of enable investors to be able to build up single unit residential portfolios. There will be, I think, a lot more interest in that, just because of the interest in having an exposure to more central locations, that is only possible through SFR, and just I think the changing dynamics from in Southern Europe, particularly of homeowners wanting to now become renters. They'll sell that stock, and that creates an opportunity to buy for investors of basically a transition from owner occupied stock to professionally managed rental stock.
Got it. Let's also explain the growth in Europe, maybe, especially with the higher regulatory frameworks in place here, especially on carbon reduction goals and stuff like that.
Yeah, sure. No, I mean, I think that's an interesting point about the carbon reduction goals and the different regulatory framework that we have in Europe. I think the European Union has definitely been at the forefront in the past few years about reaching, carbon neutral goals. And I think if you sort of look at the application to the housing markets, what that means is that the ability to repurpose already existing housing stock instead of having to build up new stock will definitely help move towards those goals. There's a lot of work, and when I say work in terms of usage of resources that are involved in BTR and building a building from the ground up whilst in SFR, if you're essentially repurposing housing, making upgrades to it, not only just changing out kitchens and or bathrooms, but making this housing stock more environmentally friendly, changing out the windows to the ones that are double paned, that way there's not so much leakage of heat or air conditioning, of putting in more energy efficient boilers. It's all about upgrading existing stock, so it's something that can be done in a more cost effective way and in less intensive from a climate perspective. And I think that will be sort of crucial to creating a viable housing sector in the long term.
Got it. Cool. Thank you. Um, Maybe, you sort of mentioned it, but what is the core reason for this space, in interest in the rental space for investors? Why it has become so popular recently? Wherever I read about prop tech space, it's primarily all about investment into rental. So what are the macroeconomics trends that have resulted in this direction?
Yeah, definitely. I think if you look at Southern Europe, culturally we have a preference towards owning your home. If you look at the Spanish market, for example, of the entire housing stock, roughly three-quarters of it is owner occupied, 25% of it is rental stock, and there have been, over the past few years, there have been changing dynamics, with more young people moving to city centers, or just mobility in general. If you own your home, you're a little bit more planted in a way to where that location is. So as the population has become a little bit more mobile, and as wage growth hasn't necessarily kept up with the growth in the price of housing stock, because of a preference and because of a price out, it's made it difficult for the younger generation to get onto the housing ladder, to acquire their first property sooner than perhaps their parents' generation. And what that means is that I think and I think definitely that the pandemic didn't only accelerate this, I think, but rather highlighted this sort of shift. It's investors realized that there is a demand for more rental housing stock, and the pandemic showed that it was an extremely resilient sector. You sort of saw that there wasn't a massive wave of maybe of defaults on housing mortgages, or there wasn't a massive move out of tenants or from their homes, during the loss of jobs, and part of because during the pandemic. And part of that, I think, was there was certainly a lot of government support towards those that became unemployed. But nonetheless, the housing sector its resiliency, I think, was certainly reinforced as a result of the pandemic. And what that has resulted in is investors wanting exposure to the rental housing market, to the housing market in general, particularly the rental housing market, because of that supply-demand imbalance. And for us in CASAFARI, I think that gives us a unique position as having the data-driven insights that we have into the market, and being able to help investors pinpoint those locations that they can not only extract value in terms of make returns, but also improve the housing stock and reduce the supply demand imbalance that presently exists.
Excellent. You mentioned about a lack of wage growth and preference for rentals. I didn't intend to ask this before, but it just strikes me. Do you see that in the coming years, there is more pressure also on the banks because of lack of housing or loan opportunities for their businesses to grow? So, do you see the pinch on the banking sector as well?
Pinch in the banking sector. I mean, I don't know what to say. I want to get so much into the dynamics behind wage growth, as I'm not a proper economist. I'm your real estate expert, but maybe I'm not your wage growth or
Just
labor market expert.
commenting, right? Maybe your gut feeling. What do you think about the dynamics or relationship with banks?
Yeah, I mean, I think if we look at it in the lens of today, what's going on, the past years where we've seen interest rates at our historical lows. And I don't think we'll ever, at least for quite a bit of time, see interest rates where they were at, pre this summer. And what does that mean for banks, and what does that mean for the housing sector? That means that loans are more expensive to obtain for homeowners, whether it's a first-time homeowner or whether you're an existing homeowner and you're on a variable rate mortgage. So what does that mean is I think that it will have it will reduce demand for new mortgages, thus reduce demand to buy new housing stock by individuals. Okay,
Got it.
but those individuals still need somewhere to live,
Live. Got it.
and
Got it.
that means they will increasingly, I think, move more and more towards the rental sector.
Got it. So the developers who would be constructing the build to rent properties, they would be taking loans maybe from the banks. So you are right in a way that it could from individual buyers, it could move to institutional buyers.
Yeah.
Excellent, cool. So if this is the opportunity, if this is the next big opportunity, where are you looking? What are the prop tech players? What kind of opportunities do you see for prop tech players in this space today?
Yeah. I mean, I sort of think that prop tech is a huge sector, or it's continuously growing and will even bigger. And I think that's because the real estate industry, as it stands today, is relatively antiquated. It's not as digitalized. It's not as forward moving or as rapidly forward moving as perhaps other sectors. It works. So oftentimes, I think the adage is if it's not broken, there's no need to fix it. But I think that's how a lot of operators in real estate work. But I think that if I would have to bucket prop tech opportunities from, at least from the specific area that I work in with of information and investments, I would say there's companies that can provide data solutions. There's companies that can provide retail investor solutions, and there's companies that can provide institutional investor solutions, right? And that's very much a niche in terms of what the whole prop tech ecosystem really is. But I look at it that way because I talk about data solutions because if you look in Southern Europe, there compared to Northern Europe, or certainly compared to the United States, there's just a lack of transparency in the real estate market. It's difficult to know where prices have moved. It's difficult to know not only what's going on at an asset level, but it's difficult to know what's going on at a city level. So I think any company that is able to make sense and bring clarity to these fragmented, opaque markets can provide a lot of value. Then there's companies that provide, if moving into the investment sector, it's almost about the democratization of real estate in investment. Looking at serving retail investors. I think of companies like Masteos, Prop Hero, Bricks, that what they do is they demystify the real estate investment process, and they allow individual retail investors or aid individual retail investors into making that leap to buying their first investment property or buying a fraction of their first investment property, and allowing them a new avenue for investment. And then of course there's what we're doing in CASAFARI Portfolio Solutions of serving institutional investors. Institutional investors have been active in real estate. Not only in Northern Europe, they've been very active in the Spanish market, but they have not been active in this SFR space. And it's sort of bringing another avenue of investment into its specific sub-asset class that previously was just too difficult, too laborious, too time-intensive for institutional investors to get into, and speeding up the entire process, and bringing a level of clarity and analysis that previously was just too difficult to ascertain.
Got it. So you're talking about three buckets: data solutions, retail investors, and institutional investors,
Yeah.
which Kasafari is leading in Europe. Are there any competitors of Kasafari in Europe today in this institutional investment space? Or
At least in Southern Europe, I would say not really. We have a 360-degree platform. There's companies that, for example, provide great, property management solutions. But CASAFARI is a partner with really strong data-driven insights and the operational capabilities to effectuate and to bring to life the plan. So I think our bespoke solution the A to Z solution that we offer is really, really unrivaled.
A to Z is the key here, right? Because there will be a lot of point solutions in the entire value chain for investors in in real estate. But
Exactly.
what you offer is end to end. And so any big institutional investors, if they need an end to end solution, they come to Kasafari. Got it.
Exactly. And that's key because no, it'd be great if I tell an investor, I can invest X million number of euros for you. This is the kind of return that I would project. But then if, post acquisitions, I wash my hands of it and I leave them to it. They're not property managers. Maybe they have asset
Mm.
managers on their team, but that connection, the alignment of interest that I previously mentioned from acquisition to disposal is just imperative to make sure that the business plan metrics are met, and to sort of allow these institutional investors to do what they do best, which is are make investments, and they're not there to manage these properties, particularly disaggregated properties.
Usually, what is the time frame for a average sized institutional investor from acquisition to disposal?
Yeah, we generally work with 5-year business plans. Sort of
Okay.
the ability it takes a little bit of time to build up the portfolio, then stabilize it and optimize it, and ultimately you want to sell it at its peak optimization level to obtain the greatest profit margin possible.
So help me understand. So an investor is also optimizing the rental yield during the hold period, right?
Correct.
Uh, would he make his money back through through the rental, or say for five years of rental, would he get back his money, or he has to sell it to make the money that he invested for buying it?
Yeah, on average, these all the portfolios that we build up are always sort of cash post stabilization, are always cash flow positive, but the bulk of the profit is at disposal.
Bulk of the profit, but they would break even while they are holding also with through rentals after a few years.
It's very much dependent on the ultimate profile. If you go of the assets, if you go
Mhm.
something that's maybe much more prime, that has a lower that has a lower rental yield, versus something that has maybe a little bit more on the outskirts of a city that has a really high rent yield, it's sort of difficult to sort of distribute where that value would be.
Right.
But by and large, they're always, usually always cash flow positive throughout the
Mhm.
life of the investment, and where the bulk of the profits is on the exit.
On the exit. Because I'm not been I cannot keep myself in the hat of an institutional investor. But if I'm a retail investor, okay, and I buy a property just to rent, okay, and
Mhm.
I'm getting good rentals because the rentals, say in UK, is going up. I'm getting great rentals. So at some point I will be deciding whether to keep holding it or whether to sell it. So
Mhm.
I'm sure the institutional investors also have some kind of a formula to make that decision, isn't it? So
Yes,
uh,
exactly, exactly.
cool. Excellent. And then you also mentioned about data transparency as a value add for the tech opportunities in this space. Did we cover that already in the data solution, or do you have
Yeah,
more to add?
I think that the value add is, in terms of data transparency, is into those data solution providers, the
Mhm.
companies that can make sense, compile the information and deliver it in a digestible way to their end client. I think that's, a huge value add, and those were the data solution providers. I think are huge, are big value adds and value contributors to the space.
Got it. So, so one of the things I'm just trying to understand. I mean, I'm sure we will have listeners from all kinds of prop tech places. But if somebody were to win in this space, what are the traits that are necessary, or what are those elements that are necessary in your business, whether it is technology, whether it is data, to win in this space? Like
Mhm.
one of the things that you mentioned, Kasafari's competitive advantage is end-to-end offering of the entire portfolio. What else do you think it takes to win in this space?
Yes, I think to win this space, For me, there would almost be there'd be two things. Number one, I think again, any startup, there has to be a sort of a level of determination and willingness to wait. Wait it out is not the maybe not the right word, but to be patient and know what your value add is, and be able to effectively communicate that and knock on enough doors, and meet with enough investors to find the right one that says, I believe in this solution, I want to work with this particular partner. So it's determination and patience, I think, is a very important trait to win. If I think about it for us personally, at CASAFARI Portfolio Solutions, working with institutional investors, there's always a very long, you know, phase of effectively designing the strategy. No institution comes in on a whim and says, okay, tomorrow we're going to invest 50 million euros. There's a lot of detailed work that goes in to designing the strategy, of making sure it's the right fit. And that's I think it's a bit longer if you work with institutions and other type of investors, but there's always needs to be this sort of patience and determination. And then I think number two is knowing to succeed is bringing a solution that previously didn't exist, or a solution that can be optimized. There
Mhm.
are companies that property management, I think, is a company, sorry, is a sector that's been around for a very long time.
Right.
But I think there's ways to digitize that, and make it better, and that's an example of just of improvement of an existing solution. So it's bringing a value add and having the patience and determination to find the right client, or find your first client.
Got it. So let's talk about Kasafari's strength as well. So you also said, so end to end is one, and then you also mentioned its exhaustive real estate database that allows
Yes.
this new business unit to move forward. Maybe you shed some light there as well.
Yeah, definitely. I mean, I think for us, like I said, we were born, Casafari, we were born as a data solutions provider, someone that's bringing transparency into the market. And, we saw the level of the strong investor interest in the housing market, and particularly of aggregating portfolios, like I said, of for investors that want exposure to this particular type of sector. And it was sort of just about pairing the strength and the quality of the data we had with the desire of these investors to have that level of exposure. So it was almost like a marriage of the two things. And I think for us at Casafari, that's, at least in portfolio solutions, that's sort of how we operate. And there's a lot of teams behind us, behind the SaaS solutions and behind portfolio solutions, particularly, our data team, the people that are able to build out all of these algorithms, and to capture the data, to deduplicate the data and bring it into a single location, and run analyses over that. If it wasn't for our data team and the level of investment internally that we've put into data collection and data cleaning, we wouldn't have in portfolio solutions or in SaaS such a great tool to be able to offer to our end users. So for us, there's such an interconnectedness of value, and a reliance on each other, for success.
Excellent, cool. I have this last question. It is a rather philosophical question. In many ways, it is, housing is such an important element for the entire human race, ever since humans began to learn building houses, and then we the for the entire sector was formalized, right? So we called it the housing sector, and property being the largest asset class. So there was a sense of a democratic adherence over the world. So the governments took care of the interest rates, the reserve banks took care of the interest rates. So do you see that people buying less uh, properties, and investment banks owning more and more properties, will they have an undue advantage to optimize the rental potential, rental yields, jack up the rentals, that eventually at the receiving end it will be the individual home renter who is going to bear the brunt of these strong big institutional um, players,
Mhm.
and taking undue advantage of them. Do you see that happening?
I think you should always plan for, always at least envision the worst case. But I think there's always sort of a balance between what the investors can and will do and what regulations permits. Particularly in Spain, there's been a lot of movement towards of trying to rein in any potential movements by institutional investors to take advantage of maybe their tenant base. But I think a lot of that it's well intentioned, but I think perhaps a lot of it is rhetoric, most certainly. I think ultimately, sort of taking a step back, I had mentioned in the middle of the call about the what the preferences are of populations, of what we're seeing populations in developed European countries do, and there is a desire and a shift towards moving towards rental versus purchase.
Hmm.
And what that means, if you look at the existing makeup of the stock, there's not enough rental property, right?
Mm, okay.
Any investor or any investor that is able to help alleviate that sort of supply crunch is
Mm,
already making I think contributing towards a positive movement. You're ultimately meeting the needs of what the populace wants.
got
We
it.
wouldn't have a supply crunch if the population was continuing to have a preference towards buying on large rather than renting. And I think that we certainly believe that the growing number of professionally managed rental apartments in the housing stock will go a long way towards alleviating this kind of shortage. And of course, adding to the housing supply with new build like BTR, it will also contribute towards that. And there will be economics. It's always supply and demand, and once the supply levels reach where they should be, then I think there's just be a natural tendency to move towards equilibrium.
Got
But I think we're also seeing a lot of investors nowadays, particularly institutional investors, have particular ESG criteria that for them it's important to charge rental rates that are in line with what the populace can afford. And I think there's almost two benefits. Even if you want to remove the ESG mentality that certain investors have and others don't, you have to look and say, if you're offering an apartment in a location that is double the rent of what most apartments in the area offer, you're going to be hurt in the at least in the short run of having high vacancy or not even finding a proper tenant. So you'll be hurt with months of empty rent of an empty apartment. You're not producing rent,
got
right?
it.
There's always the economic aspect that has to be taken into account. And also, even if you put in a tenant into your apartment that has a double the rent of what the average rent is in the apartment, and that tenant can't afford it, that tenant's going to stop paying, right?
Mm,
Eventually, or
got
if
it.
they get fired. So there's always a level of
So
I don't necessarily call it due
market
diligence,
plays a role, yeah.
ensuring that the tenant can afford it. It's not only works for them, it also works for the end owner of the asset.
Mm,
So they
got it.
have stability of cash flow.
Right. Yeah, you cannot bypass the market. The market will figure out the true value of rental, right?
Exactly. That's exactly
Um,
correct.
Excellent. I just realized that I forgot to ask a question on the acquisition side. So you mentioned about the three verticals: acquisition, property management, and asset management. Property management and asset management have been familiar use cases that there are existing players, not on the institutional investor side, but still we understand the use cases there. On the acquisition, what would be the use cases? Like, do you constantly supply all potential properties in different markets that you operate, and give them access to those properties so that they can make a decision or whether or not they want to buy these portfolios. Is this where you help acquisition? What use cases of acquisitions do you offer?
Yes, definitely. So, sort of taking a step back pre-acquisition of when we're designing the investment strategy, the investors will tell us maybe perhaps, we want X% yield, right? And the
Oh,
way
they
that
start with that. Oh,
pardon
is
me?
that how the conversation is? They start with how much they want to make.
Generally, yes, yes. They'll come to us and say, we're looking for these kind of metrics. Yes.
Oh, okay. So
That's, that's
it's not
metrics.
about help us with great property options in this region. This is not the conversation. The conversation is actually starting that in 5 years we want this percentage of yield. Is that how it is?
Mostly that is the situation. These, if you look at how institutional investors operate, they'll have, they'll oftentimes have multiple funds that have different return criteria, and not only a specific return criteria, but also having a necessity to have an exposure to certain types of asset classes. So institutional investors will generally come to us and say, this is the kind of exposure of risk level I want. This is the kind of, of yield that I need. What are my options? So
Hmm.
then we'll say, okay, we can go into this area, into that area, and develop it more that way. But they usually don't come with the saying, I want to make the most money. I mean, of course they want to make money, but really they have to make the money in line with what their particular investment metrics are.
Hmm.
A higher yield comes with an inherently higher risk.
Hmm.
And a core investor is not going to have the same risk threshold that that a value add investor will have.
Got it.
So they will come to us with those metrics in mind.
Hmm.
And what we'll do then is, sort of we'll look up opportunities that fit with that. Okay.
Hmm.
So sort of going back to your original question of the acquisition value add. So because we're able to see what occurs at not only at the city level, the city of Madrid, but also going down into the districts. Okay, the district of Salamanca versus the district of Latina. Sort of looking at what it costs to acquire, what you can rent it out for, and of course the in between of what it would cost to perhaps upgrade that stock to a certain level that one would want to achieve vis-a-vis the rent levels that you want. You then come down with all your different different
Got it.
returns.
Got it.
So then what that means is us on the so that's what we'll do in the strategy definition phase. But when it comes down to acquisitions, so we build out that everything I just said is the buy box. Okay. So once we build out the buy box of this average asset price, these locations, this yield profile, what we do is through our technology, instead of having to go look at the tens of thousands of units that are for sale, we are able to, with all the different filters, immediately receive a list of all the different properties that comply with everything that's in the buy box. And then we'll choose the best of those to start making the calls, the visits of, okay, ensuring it's for sale, seeing, what the situation is of the seller, all of that, the physical visit, the eventual negotiation if the asset is green lighted. So it's about being able to rapidly identify opportunities and doing that at scale, right? Being able to sort of quickly say, in this sub market where there's 1,000 units for sale, these 100 comply with your investment criteria. We think these are the best 50. We will call the best 50 and then visit the X number that we think that work. I think you're on mute.
How did I mute myself? That was not
There you
intended.
are.
My question to you is: so these institutional investors, they have their own investment models, right? They have
Yes.
their own logic. Do they share it with you, or over time you also build that investment model so that you are able to come up with a nice expectancy of how the investment yield would be over time?
Yeah, sure. No, most certainly. Like we generally will begin conversations with saying, now, this is what we think you can get based on your investment metrics. But
Right.
it's always what I would call a co-underwriting process,
Got it.
where we will develop the investment thesis together. us, with our own, underwriting experience, our team in portfolio solutions, we come from investment finance backgrounds, real estate backgrounds, so we definitely speak the same language as these institutional investors. So it's a very collaborative exercise,
Mhm.
and it's something that is necessary to have buy-in from the institutional investor, but also, I guess, affirmation from us being the local real estate experts of
Correct.
ensuring that what they're expecting is achievable in the market. Because it's one thing to build out a business plan; it's a complete other thing to actually turn that into reality.
Excellent. And I think over time, you will anyways get this domain expertise with more and more clients that you work. You would also get these investment models all by yourself, and then you would be even stronger. So you would fill that gap. You are a property expert, yes, but now the investment models will also mature at your end. So great, excellent, Wilhelm. All the best with Kasafari. I think. Yeah, there's no denying the fact that Kasafari is at the forefront in at least Europe, and I think you being playing a lead role there is also very, very beneficial for Kasafari. So all the best to you, and thanks for sharing a wealth of knowledge. I'm sure my audience will appreciate that.
Wonderful.
So I can't thank you enough.
My absolute pleasure.
See you around, Willem.
Wonderful. Have a great day. Cheers.
Bye.